Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket. But if you can make your client's money at the same time, it's advantageous to everyone, correct? No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Hi guys, welcome to the Greedy Trader channel. Well, I'm not exactly greedy, as most of you old watchers of the channel will testify. I have the most conservative approach to trading. It's just a nice parody idea from the Gordon Gekko mantra. There are only two kinds of traders, the greedy ones and the fearful ones.
Greed, for lack of a better word, is good. Greed is right. Greed works.
Those of you who are new to the channel, this is where you can learn how to really trade like a professional. Every video I make is packed with real examples with before and after scenarios, so you can see that it is simply a question of sticking with the plan and not changing it because you're having an emotional meltdown. No! It's 7 o'clock in the morning for me. European session is well underway and I just tuned in. So hey, here we are. The big issue is how it all comes apart so quickly, and that's what I want to talk about today, is how quickly it will come apart for you. It's just the reality of trading, really. What the hell am I talking about? That's what you're asking right now. Everything in this market is sell side. What do I mean by that? I mean that everything in this market is being sold to you. You are a net buyer of stuff. It's not easy for you to win in this particular situation if you don't develop an edge. What am I talking about? In my last video, I was trying my best to show you exactly what it is you need to do if you're going to survive. Now, let me just show you something for a second. There's a market profile chart. If you've never seen one before, then I can safely say that you're in deeper trouble than I actually thought. Now, there are a couple of deductions we were making. Look, I'm just an ordinary trader. And when you're an ordinary trader, you need to develop an edge, something that you can use consistently, an idea that is not based on what you see on the internet today, because that's the problem. What you see on the internet today is, you know, your trend line here and there, you know, this, what they call it, market structure break and SMC and ICT and, you know, all the other stuff, right? And that's what you see today. That stuff cannot give you an edge. You know, it can't help you. It might be able to give you a framework, but it can't give you an edge. And why is that? Why can't it give you an edge? I know somewhere inside of you, you've got the answer to that question, and well, it can't give you an edge because it's not, it's an idea, it's not real, it's just make-believe, right? And everyone's doing it, so what kind of edge would that be if everyone's doing it? And, you know, it's just not an edge. That's the reality. So stop wasting your time. Right? You need to develop proper edges. I have an edge. It's my own edge. I worked hard to develop it, and I've developed that edge, and I'm sure it's an edge because I've traded it, I've tested it, and I've traded it, and I tested it. And here's why it's an edge. I'm going to show you this. I always try on these videos to kind of bring some degree of value, but this is a TPO market profile chart, whatever you want to call it. 90% of professionals would use this. You have to wonder to yourself, why do you not know about this? Why are you the person who has not been using this and you've been trading for 4 or 5 years, but a professional has been using this for the entire career, right? In a space where 90% of hedge funds have some access to platforms that will show them how to use things like TPO, market profile, so on. I bet you guys didn't know that there are even lessons that are given to these traders. They hire their own in-house education to bring them up to speed with these tools if they don't know how to use them. That's the whole purpose of the business market delta. They license software like TPO to firms who hire them to come in and show them how it works. That was the whole business model. Yeah, I know it can be super challenging if you're thinking about being a trader. Just take some time to think about how hard it's going to be to you if you try and make this journey, how hard it's going to be for you if you try and make this journey. Anyway, in the world of trading, timing is everything. Gain the edge you need with Bookmap, the ultimate platform for real-time market visualization. Track the very pulse of the market with their liquidity heat map. Visualize historical and real-time order book data to spot opportunities as they emerge. Analyze buying and selling pressure with their customizable volume dots, giving you precise insights into the market behavior at every price level. Stay ahead with their advanced order book visualization. See the full picture, current and historical order flow at your fingertips. Monitor the market movers with their large lot tracker. Identify significant trades and follow the footsteps of major players. Unlock deeper analysis with powerful proprietary indicators like the imbalance indicator and ISO order detection, designed to give you the ultimate edge. Trade anywhere, anytime. Connect to leading global markets, including futures, stocks, and cryptocurrencies, all in one platform. Take control of your trades with an interface designed for efficiency. One-click trading, drag and drop order adjustments, and real-time updates keep you in command. See the market like never before. Gain clarity, confidence, and control with Bookmap. Start your free trial today and get up to $120 off yearly plans. Help support the channel and Bookmap by using the link in the description. TPO. Right, so this is a TPO chart of cable. Most of you are sitting there thinking, where's this going to go? Where's this going to go? Well, look, I know what's going to happen. I can't tell you where it's going to go, but I understand the volatility plane of cable. And I'm going to show you exactly why I understand that, but I understand that. I can clearly see that, well, this market is probably going to go through value. Right, first and foremost, and that means that we're going to extend a little bit to the upside. We've got a responsive seller here, we've got an initiating seller here, we've got an initiating seller here. So we've got a cap to this based on volatility. We know what the ATR is, or the expected move. So I'm focused on where this is going to push through. As soon as we start to get to the upper deviations, I want to be able to take a trade that is going to give me an edge in terms of not only just protecting my risk, but giving me the ability to be in this market long enough to be right. It's all volatility. Because remember, when you take that long position, someone has sold you something. Even if you take a short position, someone has sold you something. You are a net buyer all the time because there are traders out there selling you volatility. That's it. And every time you buy volatility, you got the highest probability of losing. That is why the business is so hard. So if I know that, I'm not trading the price. I'm trading the volatility. I can play this trade out as a cash trade, but that would mean that I'm a net buyer. I'm going to have to buy something from someone else in order to get into this position. So I'm being sold to, you are being sold to every single time. That means someone is directly profiting from your decision. That's why you can't win. It will come apart for you very, very quickly. How quickly can it all come apart? That's the question. Very, very quickly. I'll tell you that. That's why I sell premium. I sell volatility. See, the volatility that you're buying, that's what I'm trying to sell you all the time. That's my edge. That's it. So I sell a lot of premium. So I take these ideas from that market profile and I sell that into premium. I can do the cash trades too. Sometimes it's fun to do the cash trades. Sometimes you just want to be a net buyer, and that's okay. But you have to have an idea at what point do you want to be a net buyer. But most of the time, 99% of the time, I want to be selling volatility. How do I do that? So talking about that trade, we know it's going to go up. So if I take the pound options on the futures contract, they're trading at 39 ticks, right? I want to sell someone insurance premium for strikes. In this case, just spread this out a little bit, for the 126 calls. Where's 126? It's all the way up here, right? All the way up here. If I'm successful, right, so I'll sell them, collect the cash. It's 39 ticks. I am going to sell someone 39 ticks. I'm going to collect 39 times $6.25. We can do the maths, but it's somewhere around $243, $245 per contract in cash into my trading account. I'm holding that. That's premium. The deal is done. These things are subject to time decay. They are subject to volatility decay. So Vega, volatility drop. I mean, look at it's 8.2% annual volatility on cable. That's the implied volatility. 8.2%, that's it. That stuff isn't moving. Currencies are depreciating assets. They lose value over time. Even if their volatility plane is 8.2%, they don't go up 8.2%. They just don't. Don't believe me? Look at the pound. Let's go back. This is how much value the pound has lost since 1974. It was $2.53. Today it's sitting at $1.24. There have been volatility spikes where it's gone up, but for the most part, for its lifetime, through various different events, it's gone down. Plain for everybody to see. Not a secret. Back to the point. I want to sell someone volatility. That's it. Because I know that either way, there's going to be time decay. Because I know either way, I've already collected the money in cash. And because I know that this option contract will expire in exactly 23 days. No one's going to want to buy insurance at 39 ticks in a couple of days. There will be time decay. That's the point, guys. If I open up this premium chart, you can clearly see what people were willing to pay at the highest point, which was 92 ticks. And that was on the 27th of January. And you can clearly see if you were that trader who sold someone volatility at 92 ticks, you can do the math, $6.25 times 92. Within the space of 5 days, that volatility was worth 30 ticks. You collected 60 ticks worth of volatility, and you could have bought back this contract and closed yourself out of this position with whatever the difference is between 90 ticks and 30 ticks. That last trade was done at 30 ticks. Since then, if you kept on holding it for a couple more days, well, you could have closed this whole thing at 19 ticks, right? So you nearly saw a complete wipe in the value of option premium. That's an edge. And this is happening across all contracts. It's the same if you'd sold someone a 122 put. You know, sterling's doing bad, but, you know, 122 probably will be a little bit unrealistic within the volatility frame and the time frame. Look, guys, it's just the reality of it. Like I said, you're being sold everything all the time. Look, to prove the point, I just closed out my 105 puts on AMD. I averaged about 390 on these, right? Because I sold someone puts at $3.46 and I sold them puts at about $4.30. So I averaged roughly about 380, 390. I covered them at 235, right? Splitting the bid, splitting the spread. I've got March 21st. I've covered them already. Do the math, right? You're sitting on a couple of contracts of these things. You make some good money. And you don't need to have a lot of cash capital to be able to do that. Point in case. For me, this is an edge. If I can get away, and you know, currencies have, you can see 35.9% implied volatility for selling a stock. The volatility in stocks is crazy. That's AMD has a 35.9% annual IV currently, and that stuff can go up to 60-70%. So there's a lot of movement in these risk premiums. That's an edge. If you go out to currency, it's 8.2% annual volatility. Look at the difference. That is more than 5 times less volatility in currencies than there is in equities. I'm not even going to go into stocks like Coinbase that can go as well as high as 100% implied volatility. Why don't you know this? That's the question you should be asking yourself. Why don't I know this information? Why is this the first time I am hearing about this? Why is this the first time that I'm tuning in to listen to a random guy on YouTube and he's telling me this stuff that people will pay thousands and thousands and thousands for? That's the question you should be asking yourself. Look, I run a really small YouTube channel. I really appreciate you guys being here and just listening to me and supporting the channel. Barely get any views. Right? Because YouTube doesn't want to push people who are not being followed by tons and tons and tons of other people. And we know that the people that you're following and boosting their following is, look, it's a game of numbers, right? The influencer YouTubers, they got it wired. All they need to be able to see is that people are interested in this specific topic and they just make a video. They got all the cool lights flashing and that's what you like. The algorithms worked it out and that's what gets pushed. Because that's what YouTube considers to be the best quality video to put ads on. The longer you spend watching and listening to me and actually taking this on board, I am giving you value. YouTube's not interested in pushing me because half of you are just going to click off anyway. I mean, by this point in time, I've probably lost 50% of the audience. If you're still here listening to me, fantastic, you know, amazing. You're going to learn a lot, but at the same time, thank you for supporting the channel. I really appreciate you. Because without this, the word can't spread. These influencers are going to keep getting a foothold. They're going to keep telling you what to do. Right? That's not going to change. That's just it. They're just going to do it. And to be honest, you know, I'm a British guy, right? An English guy having a chat with you about US markets. And if you're an American, well, you might be thinking, well, you don't live in the US, you're not American, all that other stuff. But reality is, information's information. I've been trading your markets forever. Elevate your trading potential with E8, the best prop firm you've never heard of, where innovation meets opportunity. Access a wide range of markets from Forex to futures and more, all through their comprehensive evaluation programs. Tailor your trading journey with their customizable evaluation programs designed to align with your unique strategies and trading goals. Demonstrate your skills and swiftly transition to managing a funded account, earning up to 100% of the profits. Trade with confidence on their state-of-the-art platforms like CTrader, equipped with advanced tools and real-time data to improve your trading experience. Enjoy fast and reliable payouts with the ability to request your first payout in just 8 days. Join a thriving community of traders worldwide with 24 hours a day, 5 days a week support and valuable resources, all at your fingertips. I am super critical of prop firms, but E8 is definitely the best and has stood the test of time. So sign up now using the link in the description below to get 5% off your first evaluation. Do it now. And that means that I know about your market and some of you know about your market. So I like to think I'm providing global value at this stage, whether you're from the United States or whether you're from the UK. But YouTube doesn't care, right? I've got a British accent, so essentially I'm going to get pushed to people in the UK more than I get pushed to people in the US. So it's all against me, basically. But because I know how quickly it's going to come apart for you, no matter where you live in the world, I am sitting here and I'm thinking, why not talk to everyone? Talk to the world. It just makes sense. The more we talk to each other, the more this stops happening and the more I can help you find your edge. I don't run ads anymore on the YouTube channel. Well, I've got sponsors and they run ads, and I will include them in the videos. If you support the sponsors, you support the channel. But I've decided that for now, I'm not going to run AdSense so you can get to listen to me uninterrupted. Because that makes sense. This is such an important topic that I just don't want to give Google the opportunity right now to run ads. Because I want you to hear it. So I don't benefit anything. If you support the sponsors, that helps the channel, but I don't benefit anything. And I put all those links in the description so you can see them. And I try and find good sponsors that reflect my value. It's not easy. Like I said, everyone's selling you everything. You are a net buyer. But some things you need. Some things are going to get you where you need to go. There's going to be benefits. But by and large, you are still going to be a net buyer. I don't think you can escape that. So if you want to have some semblance of control in this market, then you've got to understand the things that I'm telling you. Because why can you not do what I'm just doing right now? I can help you, I can teach you, I can show you how that's done. And the one thing I don't do is I try my best that if I end up working with a trader, I work with them one-on-one. It just makes sense that, okay, I teach you everything that I know and I dedicate that time to doing that over quite a few months because that makes sense to me. I could just as easily sell you a course on how to do this, sell volatility, understand the entire wheel of financial markets, not just trading Forex or something. You know, I mean, you've just seen this. Professional FX traders, that's what they're doing. They're selling volatility. They're selling options on futures. They're selling you volatility. That's what they're doing. And they're making money hand over fist. It's an 80-90 probability game. Okay, let's prove the point. Let's take those 126s. I'm going to run them in a strategy builder. $23-day. We split that spread. It's about 38.6. This is the margin impacts. It costs you absolutely nothing to get into these positions. You just got to watch the margin. You can further adjust margin. You can reduce buying power by just buying the wings, right? So you can create what we call a spread. So I'm short 36. I run it through the strategy builder. And I create a spread. Let's go out in time. Let's get something incredibly cheap. And it should. Look at that buying power reduction, right? And all I did was agree to give up 4 ticks for my initial 38. So I'll end up collecting 32 or 6 ticks. So that's the spread, right? In fact, I could bump that up a bit, collects 35 by splitting the spread. Now, what's the probability that this spread, this option spread, is going to end up paying me this net credit of 35, right? 35 ticks. It's 35 times $6.25. That's the premium I collect. Let's take a look. There is a 77% probability that I'm going to walk away with a profit. 77%. That's what the machine says. There's a 74% chance that I collect the max return per contract on this. Do the math. 74%, right? This is per contract that I collect the max. My max loss is less than 2.5% chance that I'm going to take the max loss if everything comes apart, how it just goes to, and I'm not saying that this is not the loss on this is just the entire exposure and the worst in the world happens. There's a 2.5% chance that that's going to occur. That's me being out for a 10x blast. I lost control of this thing. The volatility just expands. Not going to happen. It means essentially sterling would have to move its entire annual volatility in the space of a week. So it has to do a year's move in, in a week or two for me to be out on this. Or even it must have to do this, let's say, even if we took the entire life of the contract, which is 23 days, it will have to do its entire move in a month. That's not going to happen, hence it's a 2.5% chance. Right? If I took the spread away, it will reevaluate that, right? So you can see there's now a 78% chance that I'm going to make a profit. 78% chance. Obviously, it's saying my max loss is infinity because this is me selling a naked put. I'm pretty much selling the volatility, so I'm fairly confident about it because currency, it says, well, it can go to infinity, but there's a less than 1% chance of that happening. And there's still a 74% chance I'm going to collect max return. That's just crazy. But that's what we call an edge, guys. It won't be called an edge if it wasn't insanely profitable. Look, things can go wrong. It can all come apart really quickly. That's absolutely true. Like I said, scenarios like that could happen. So that's why we might protect. You can see there are options for you to protect. It's not just like, you know, this is it, this is the only trade you can do, and it's all risk on the table. See, that is what they want you to believe, that when you come into these markets, it's all just risk, and you're dead either every way, and there's just no way of protecting yourself. You're just completely hopeless. You click the button, you sit there, and you hope to God that something good happens for you. This is the state of mind that they want you to have. So you can never be serene, relaxed, chilled. You're always worried because, you know, sometimes some people can't even sleep at night just thinking about their positions they got on. I've got no such problem. I go to bed, I sleep like a baby. I've got other things to think about because I've already got my edge. I know that there's always going to be an opportunity for me. This week, sold puts on, well, I say this week, but I closed puts on Nvidia, right? Had those on average about $2, right? Closed them just into the 80 cent mark. You know, if I'd stayed in this for a little bit longer, I'd be able to close them as low as 70 cents. It doesn't matter. So I had those. Earlier, a couple of weeks ago, I had the 115s. So you can see I closed them down here. And I just closed out my AMDs. Guys, it looks like I'm printing money hand over fist, right? But it's not that. I'm just taking advantage of a current edge in the marketplace today. And now I'm looking at cable, and I'm trying to look for an opportunity to sell these options on futures, right? These March 7th, 126 calls when the opportunity presents itself. See, that's the beauty when you understand everything about the market, not just doing your simple spot CFD trades, right? It's fantastic. Brokers, they love that. They want you to have accounts with them, and we have brokers that sponsor this channel. Right? And we think it's great that you have that kind of access to the market. So you can play both ways. But let me give you an example. If you thought you wanted to buy one lot of cable that it was going to go long, right? But you buy the one lot. It's one lot. It's 100,000 base position. In the futures market, a base position is 62.5K. Right? So it's a little bit less than what you get in the spot market. So why don't you sell volatility at, let's say, 126 and buy cash? If the market goes down, well, your premium will offset. So you can essentially sell volatility for 39 ticks, which is acting a bit like a stop loss. And then you can buy. Right? So if your trade's going against you, you can just offset that. And you can keep selling volatility to offset the downward play until you're back to break even on your spot, and then you can close your cash. And so you're giving yourself a chance for the trade to work. And you've got to remember that it doesn't matter. Even if you sell the volatility, that you're probably going to keep the credit for that anyway. Regardless, you've seen the probabilities, right? What the machine says. Right? And that machine can be off sometimes in that it turns out a lot better than the machine says it's going to do. So the machine takes a very safe idea about calculating probabilities. If you take a look at what the actual risk profile says, you're going to come to a completely different conclusion than the machine. But hey, that's life. You can see you've been sitting and watching this premium chart barely moves. It stays steady until, you know, we get major drop in the price, and then you can see that premium losing value really fast. So there is a time decay element. Obviously, there's a delta exposure, and that's it. So you could do that. You could get long and sell volatility. You can skew that if you like. You can sell more volatility and then essentially fully offset that cash position. So you end up with a delta neutral position. If the market goes down, well, great. If the market goes up, your cash profits, and then you have time baked in. So if the market may well just have a volatility spike and go down, and you collect on both. That's why people sometimes will sell the put on the call side, right? So they'll do what we call a strangle. Anyway, guys, I hope this has been an education, but you know what? To my next video, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket. But if you can make your clients money at the same time it's advantageous to everyone, correct? No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?